Nvidia stock has had an amazing year thanks to the demand for its AI hardware, more importantly, the H100. Unfortunately, AMD's earnings might have some investors worried about the future of AI demand. Luckily for us, two tech giants, Microsoft and Google, recently reported earnings and let us know how their investments in data centers and AI infrastructure is going. So let's take a closer look and what it means for Nvidia investors. Welcome back. For those not familiar, my name's Jose Najarro, and I spent way too much time reading about semiconductors, but thanks to that, my master's in electrical engineering, and my experience working at various innovative companies, I believe I have created the #1 semiconductor podcast for investors. So let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so let's start off with Google. Like we see, the stock is down roughly 7.5% after reporting earnings last night. There's plenty of videos on YouTube right now discussing everything that could have gone wrong with Alphabet. But like I clearly stated in the intro today, I just want to see what they mentioned about the AI solutions. And we can see Nvidia was down roughly 2% on the day, sitting at 615. And AMD actually shocked me how well it did after the guidance they gave yesterday. And let me say, I'm not bearish on AMD. This is my #2 position, but I believe for the stock to have run up such a nice amount in the past 30 days, investors should have been expecting more. This is a company that's trading at next 12 months PE ratio at 45. And to me, that seems a little bit pricey, but we can see in the past 5 days, the stock is down roughly 9%. In the past day is down roughly 2.5%. So when we take a closer look at Google, Alphabet, I want to say the most important segment here when we're taking a closer look at AI solutions has to be their cloud segment. And they do mention revenue was $9.2 billion for the quarter, up 26%. And they were very pleased with the momentum of Google Cloud with the increasing contribution from AI. Now, if we take a closer look in CapEx, they did mention that for the fourth quarter, CapEx was roughly $11 billion, driven by an overwhelmed investments in technical infrastructure, with the largest component for servers, followed by data centers. So here, they're pretty much saying, hey, look, we're investing a lot of money in AI chips. Obviously, for Google, they do have their own silicon, their own TPU that they've been developing for numerous years, and I believe they're either on the 5th or 6th generation right now. So they do have their own TPUs, which they use for their data centers, but they also buy a lot of AI chips. So we can see in the fourth quarter they purchased a lot of great AI components, and most likely that is going for Nvidia. They do mention that the step up in CapEx in quarter 4 reflects their outlook for an extraordinary applications of AI to deliver for users, advertisers, developers, cloud enterprise customers, and governments globally, and long-term growth opportunity that offers. So this is another thing, right? So many people are kind of discussing this AI as being a niche and only kind of being entered in certain markets. But Google right off the bat says that, hey, look, their AI solutions that they are offering is going through a vast majority of users, from advertisers to governments globally. They also mentioned, and this is what I believe Nvidia investors should be excited, that in 2024, they expect investments in CapEx will be notably larger than in 2023. So right off the bat, we can see they're going to spend a lot more money on AI chips, being both internally and externally, which bodes well for companies like Nvidia and AMD. So now I kind of want to bring back these numbers, and we saw that CapEx was about $11 billion this quarter. Now, if we take a closer look at their 10K report, we can see how capital expenditure has increased throughout the years. At the end of 2023, which we just finished, it was $32.3 billion. Last year, it was $31.5 billion in 2022. And then if we kind of take a closer look at 2021, it was 24.6, and 2020 was 22.3. So almost a $10 billion growth between 2020 and 2023. And some of you might be wondering, hey, Jose, that's crazy. Only $10 billion extra on revenue here from for AI, for their capex. How is Nvidia gaining so much more revenue per quarter? Right, we're seeing Nvidia's revenue grow by 10 billion per quarter. And first, I want to say there's numerous Google Cloud, there's numerous cloud server providers, right? It's not just Google that's increasing their capital expenditure. It's other big players out there, and we're going to see like Microsoft too. The other thing we are seeing is capital expenditure has shifted. In 2020 and 2021, most of it, not most of it, a good portion was probably going into things like leasing leasing apartment buildings, real estate, to some extent, to host engineers and other type of workers, where now it's mainly focused on data centers. So while the number might only be up $10 billion in forms of the high end, the actual shift between going to data centers might actually be a lot higher than that, and going to AI chips, because it is shifting. The wallet is shifting a little bit more to AI infrastructure, to data center solutions, and the other thing that we are seeing is wallet shift is also shifting from CPUs to GPUs. So again, it's very important to not just look at that number as a whole, right? That 10 billion, and say that's the magic number. No, because there's so many ways that the wallet is shifting in forms of number, that the percentage going to AI solutions could be a lot higher than that 10 billion. That's the point I really wanted to make. Now, if we take a closer look at Microsoft, Microsoft was also down, but not the same as Google, right? Microsoft was down roughly 2.7%. And Microsoft right now, in my opinion, is the clear winner, or has the golden child in AI, thanks to OpenAI and ChatGPT. And I do believe Microsoft is doing really well in integrating their AI solutions. If we take a closer look at Microsoft's transcripts, it's filled with amazing information, in my opinion. First, they mentioned that their cloud server, Azure, again took share this quarter with their AI advantage. And this is another driver in why companies like cloud server providers need to invest in the best chips, because if they invest in the best chips, it gives them a reason to gain market share. And then when they gain market share, they're able to cross-sell their other clouding solutions. So even if maybe they might not be focused in AI, they need to one way or another, because if not, they're going to lose market share and they're going to lose customers. They do mention that Azure's offers the top performance of AI training and inferencing in the most diverse selection of AI accelerators, including the latest from AMD, Nvidia, and their first-party silicon, the Azure Maya. And this is a chip we have been talking about, where a lot of these big tech players are creating their own chips. But at the end of the day, I really wouldn't be worried for Nvidia right now. Maybe that's something in the next 5 years we can discuss. They do mention that they have now 53,000 cloud AI customers. Over 1/3 are new to their cloud over the past 12 months. Again, so this is why these companies need to focus in AI, because it's a strong way for them to grow cloud. So they are forced to some extent to make sure to invest in AI investments, like I mentioned, like Nvidia's AI chips. If not, they're gonna lose market share. They are seeing larger and more strategic deals with the increase in numbers of billion-dollar plus commitments for their clouding solutions. They mentioned a company, Vodafone, for example, will invest 1.5 billion in cloud and AI services over the next 10 years. And these kind of long strategic investments make it so they go to Nvidia and say, hey, look, we're going to need the products, so we're going to start ordering right now for the next generation of chips. Now, Microsoft's cloud revenue did grow a nice amount. It was up 24%, sitting at $33.7 billion. They mentioned that their Azure and other cloud service revenue grew 30%, including 6 points of growth from AI services. So they're even letting investors know that, hey, look, we are growing, and thanks to AI, we're actually growing a bit faster. So now if we take a closer look at capital expenditure, they do mention it was a little bit lower than expected. It was 11.5 billion, but the main reason it was lower is because third-party capacity contract has shifted. And what that pretty much meant is right now the GPU market is very supply constrained. So they were probably expecting some data centers, some servers this quarter, but unfortunately, because of the GPU supply constraint, their third party was unable to complete the order, so it was pushed off to Q3 instead. But they mentioned that they will continue to invest in cloud demand and very focused on scaling up their AI infrastructure. They believe that capital expenditure will increase materially on a sequential basis, driven by investments in cloud and AI infrastructure. Now, if we take a closer look at Azure, they expect quarter three revenue growth in constant currency to remain stable to their stronger than expected quarter two results. So they still expect strong growth in their clouding solution, and they do mention is going to be mainly based on consumption businesses with continued strong contribution from AI. Now, during the Q&A session, there was a pretty interesting question, and it was kind of talking about AI and what's driving most of the growth. Is it training, and when is it going to turn into inferencing? And Microsoft actually came out and just said, just on inferencing and training, most of what you've seen for the most part is all inferencing. So none of the large model training stuff is in any of our higher numbers at all. So this is very important because inferencing is what's going to continue. It's going to be like that. It's that fuel that powers these AI solutions. So whenever you ask ChatGPT a question, inferencing is what reads that question and decides how to answer. So many investors were worried that, hey, when training was over, we were going to not need the power of inferencing, or the computational power of inferencing was going to decrease. But that's not the case. It does seem like inferencing is going to be a big play here, and you're going to continue to need those AI infrastructures and those AI solutions, which bode well for NVIDIA. Now, to kind of finish off my thoughts, I just want to show that Supermicro on Monday did report earnings, and they did give us some great insight for semiconductor investors, and I did cover this on an episode prior. But just want to reiterate that the CEO mentioned, I feel very confident that this AI boom will continue for another many quarters, if not many years. And together with the related inferencing and other computing ecosystem requirements, demand can last for even many decades to come. We may call this an AI revolution. So in my opinion, based on everything that we're seeing from Microsoft and Google and from Supermicro, I do believe that NVIDIA will have an amazing quarter, and we will have an amazing kind of guidance for at least the next few quarters. So at the end of the day, I do believe NVIDIA, even though it has run up a nice amount, it definitely has more growth opportunities. Obviously, the big risk here is eventually, maybe, we might see over inventory correction issues, which is definitely a possibility in the semiconductor space, or we might start to see some weakness in certain AI solutions. But as of right now, things are looking pretty healthy for NVIDIA. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.